And then to go back to the idea from buyers on like, oh, well, there's gonna be all these homes that hit the market. I went back and looked at some foreclosure statistics, and it looks like right now in the Antelope Valley and our primary zip codes, there's 136 homes in foreclosure. That's not a lot.
But it sounds like a lot, right? I mean,
It,
if you hear that number and you don't really know what it could be, it sounds like a ton. Like, I don't think we realize how many homes are in the area. There's a lot of homes in the area. I mean, how many do
we're at
you?
about 125,000.
Okay, perfect, right. So 125,000 homes, and you're talking about,
A
like
tenth of a percent.
a tenth of a percent, yeah, would actually be in some kind of a distressed position at that point. So
Yep.
it's not very many.
Not a lot. And then I was like, okay, well, we've had the moratoriums for the vast majority of the year, meaning that the banks weren't foreclosing due to COVID, right? Like if the owner could say that they were impacted by COVID in any way, I don't even know that they really had to prove it, but if they said it, the bank wouldn't foreclose. Um, with that in mind, we've had 74 homes foreclosed this year. So there was 100, and 36 in foreclosure. We've had 74 actually foreclosed. Um, Again, that's a tiny number, less than a tenth of a percent. Um, and then just to get a feel for it, I went and looked at last year, so 2019, how many foreclosed from January through October. It was only 228. So
So it's the whole year,
the whole
all
year
2019, or actually
through
from
October.
January to October. Okay.
Yep.
Yeah.
But that's still not a lot. And then so I was like, okay, we're at the peak of the market right now, right? We're certainly at a peak. Whether or not it's the final peak of this market, we don't know.
We've created a new level, right? We have national, like our average or our highest, the home price is national average is as
Yep,
high as it's ever been.
for
So
sure. And in the Antelope Valley for September, it was the highest by far ever. It was 392,000 was the average selling price.
wow.
And in August of 2006, which prior to 2020 was our high mark, it was at 355.
Got it.
So more than 10% higher than the previous peak. Um, so I went back to 2005, which was, part of the peak of the market. And for that year, there were 272 homes that foreclosed.
Okay.
Again, not a lot. And last year was 228. This year's an oddball because of moratoriums.
So 2005, if we kind of like explain that to some people, we go back.
Mhm.
Lending was relatively easy, right? You had to kind of check your pulse,
Yep.
fog a mirror,
Yep.
as long as you're breathing.
And promise that you make
Yeah,
200 grand a year.
you got a loan. And so those were very easy times, where today we're still looking at tax returns, we're looking at W-2s, we're looking at pay stubs, we're looking at assets, we're making sure that people actually qualify. So from a lending perspective, much safer now in terms of the way we're vetting our buyers
Mhm.
than it was back in 2005. So just wanted to kind of point that out. That was a rising market, but a rising with very, very little checking of somebody's actual approval level.
Yeah, I mean, we had, this obviously, but for the listeners, we had adjustable rate mortgages where, the homeowner, their interest rate would change as the market rates changed, right? And then we had the 80-20 loans where people were getting out of pocket almost zero to buy these houses as long as they had a pulse and could fog a mirror. So that's what led up to that, right? And so in 2005, 272 homes foreclosed. 2006, which was the peak, that was August of 6, was the peak of the last market. In 2006, 744 homes foreclosed.
That's a big jump 1 year.
Yeah, an extra 500, it tripled, right? Kind of crazy. So, and then after 2006, like I said, that was the peak. And so what happens after the peak? It goes down. 2007, 2,900 homes foreclosed. So that's a massive jump that, quadrupled.
Right.
2008, which, everybody remembers the meltdown of 2008.
Right.
Number of homes to foreclose, 7,800.
Wow.
Now go back and think, we had 110,000 homes ish at that time.
Right.
7% of the homes. So, we were talking earlier about right now, less than a tenth of a percent of homes are in foreclosure, and it kind of sounds like a lot. 7% of all homes in the Antelope Valley foreclosed in
Yeah.
2008. That was a big deal. That was the meltdown for sure.
So
Um,
in perspective, you had, I think you mentioned 74, is it 74 homes this
this year.
year?
Mhm.
Okay, so 74 homes versus going all the way back to, if you were to kind of compare and say, hey, 2008, it's the world's collapsing again, 7,800.
Mhm.
It's a big, big difference. And that's the reason why we saw value shift so rapidly, is because, the banks couldn't keep up with how many homes were foreclosing. They just wanted them off their books. They were just dumping these things, left
Yeah.
and right. Um, but at 74 homes year to date is nothing. And I don't know the number, but I would imagine those that foreclosed this year did not foreclose like 50 cents on the dollar. Like, they were paying a premium. I know some flippers and
Yeah.
investors that are buying these things, and they're telling me they're paying almost market value. They're just not competing with, like, 30 people for the house.
Yeah.
At cash, they're trying to buy them, and they're buying them almost at market.
Yeah.
So
And sight unseen, like a lot of people don't
I don't
understand that.
100%. Yeah.
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 So it's crazy, but yeah. So, not that we're necessarily heading that direction, but to point out how quickly it changed in the last market. So again, 2005, we were 272, 2006, 744, 2007, 2,900, and 2008, 7,800. I mean, it just
Right.
turned over like that. And it probably would have done it even faster if the banks were able to handle the volume. I mean, they were just so understaffed. They had no idea what was going on, never seen it before, or not in a long time. And had they been adequately equipped to handle the foreclosures in a timely manner, it would have been much higher than that. I mean, I remember doing REOs that had foreclosed like 2 years before we even got the assignment,
Right.
and it was just so crazy.
In the
But
asset managers they were like a bank teller, 3 weeks ago. Now they're
yeah,
handling like a portfolio of 300 or 400 assets that are distressed. They don't know what to do with them. So,
oh,
you were kind of teaching them how to do the job back then. It was funny.
yeah. So anyway, again, like not that we're necessarily heading that direction. I really hope that we don't, right? I mean, selfishly, I would like to see the market correct a little bit,
Sure.
but I hope that we don't do that again. I mean, that was a scary time for a lot of people, um, but we're not expecting, that kind of tidal wave of new inventory from forbearances.
Right.
In a negative aspect as far as them foreclosing. Like maybe there's people that can't continue to afford the home and they'll make the right decision and sell it. Maybe, but like you said, the number of homes in forbearance has fallen. Um, and so they're just going back on, business as usual with their lives. So we'll see. But yeah, a couple weeks from now is November. We'll see how that hits. And you know, just on forbearances, let alone what impact the election is going to have. And I think the rest of the year is going to be pretty interesting for sure.